Good morning, it's Jeffrey Cohen, Monday, June 13. You might be wondering, why, Jeffrey, are you coming to us so early in the morning? Well, it's because I'm taking my daughter to summer camp this week in Wisconsin. And so I've got to get up very early and I've got to get her out. So we're going to try to talk to you a little bit earlier in the morning. So the markets really aren't that open. But last night, wow, it looked like there was a crash. Huge crash coming. Really bad times. So let's take a look at the bonds. Let's see, is there a stock market crash today on Monday? Or is it just going to be a great day, right? So we'll start with the bonds. So your 30-year Treasury bonds are up to almost 3.3%. It's interesting because not that long ago, they were like 2.5%. And so this has a direct impact on the cost of funds, and the valuation of fixed income investments, which many of you may have on your, in your 401k. So this says that people need more money to basically lend for 30 years. Either it's because they're worried inflation will continue or some other reason. But this is generally bad for economic activity. So we start with 30-year Treasury. The bonds themselves are cheap. The yields are very high, and wow, that's not great for the market. So what else we got? You can see I prepared 10-year treasuries at 327.3, so that's pretty much the same number. Hang on a second, that's strange. Okay, so we're going to take a look at that juxtaposed. 327.4 for the 10, 327.8 for the 30. Not normal that the 10 and the 30 would trade at the same number. If we look at the 1 month Treasury, when we started talking, this was like 0.6, 0.5, 0.7. Now it's 1.1. So it's working. Whatever the Federal Reserve Bank and the FOMC are doing, it is driving interest rates higher across the yield curve. Starting with the 1 year at 1%. So this chart down below shows you they were fairly zero. The 1 year, and now you see the 1 year at 1.1. This chart is a terrible chart. It is not accurate. So we're not going to worry about the picture. But the number's important. Makes you not trust it when the data doesn't look right. So here's the yield curve as it was. That's got to be a week or two ago. It's a bad picture. I love it. I love it when we're more current than FINRA. So I don't like their data. Let's see the corporate data I do trust, though. So if we look at Treasury and agency debt, this was on Friday. Friday, you see advancers very few. This is number of issues. Decliners were quite high. So fixed income had a bad day on Friday. Makes sense if interest rates are going up, then the value of bonds are going down. But this is Treasury and agency. This is Freddie Mac, Federal Home Loan Bank, probably Farm Bank in there, Fannie Mae, right? And if we look at the corporates, you see corporates also had very few advancers, very many declines, and the blue color is investment grade. So what that means is companies that are not fighting bankruptcy, that are not dancing with the devil, that don't have issues paying back their debt, they're still just driving down the valuation. It's really important that you know that because some people invest in companies with the stocks, common stocks, and some people invest with fixed income or bonds. And so the bonds are getting weaker, which means the returns to stocks should be getting higher, but so is the risk. So, now, why is that, Jeff? Because fixed income comes earlier in the liquidation cycle. So Revlon, you all heard that Revlon was going out of business yesterday, Friday. No, I don't want to pin that. I'm so sorry. Here we go. Unpin it. Well, I duplicate it. We'll pull up Revlon. REV. So Revlon said probably going to be bankrupt soon. Imminent, right? So you see how the stock went from $4.50 to $2. So what happens is if Revlon goes bankrupt, they add up the assets and the liabilities, they subtract them out, they pay off whatever they can pay off. Now, they may have to sell things like everything in their warehouses. Just sell everything. Sell the furniture, right? to be able to pay off as much as they can of the debt. So what happens after they've paid off all the debt? Now let's take a look. We're going to do a quick balance sheet look on Revlon. You can do this too. Yahoo Finance, you go over there, you click balance sheet under financials. By the way, you're always better off going to the 10Q, but sometimes for a quick and dirty, you take a look. Total assets of Revlon is $2.4 billion. This is as of the end of the year. Let's take a look at the quarterly. That's better. So assets are $2.4 billion at the end of the quarter. Liabilities are $4.4 billion. There's not enough money to pay off the debt. Okay? So what's going to happen is they're going to pay off all the current liabilities, $800 million. They'll probably pay off the employee benefits next, $143 million. Then they're going to try to pay off as much of that long-term debt and capital as they can, $3.3 billion. So there's nothing left for the common stock, for the shareholders. So right now, when you look at their balance sheet, common stock equity is minus $2 billion. So what that means is there's no money left. That $2 a share is most likely zero per share if they actually go through bankruptcy and it's a normal liquidation. So, a year ago, fixed income, $4.4 billion, you would hope that they would have dropped the price of that. So we're going to take a look. We're going to go to FINRA Markets Morning Star. Twinkle, twinkle, little star. Let's go to Revlon. Let's see how their bonds traded. Okay, love it. The 2024 bond is trading at 10 cents on the dollar. Okay? You could buy that bond for 10 cents. You can get 175% yield if they don't go through bankruptcy and they don't wipe out the bondholder. Just want you to think about that. You can buy $1,000 worth of bonds for $100. Back here, you could have paid $75. You can see these are small sizes, 10,000, 30,000, 33,000, because people are trading this like trading cards or stocks. They're not trading, and they're trading it fast. 343, 324, 319, 309, 308, 249. So what's happening is people are really trading this stuff, right? Yesterday at 2 o'clock Eastern, it was 21. So the price dropped in half. So you can see how quickly it moves. Fixed income is no safer than stocks. So keep your eyes on your companies. So let's take a look at the futures. Why am I doing this so early? Why didn't I just go with Hope to her summer camp? Well, in part because the VIX is over 30. We know what that means. We know that the volatility in the market has gone up. And by the way, we published data last night that showed, I don't want to show you the gloom and doom stuff. Let's show you just some research. Everyone loves a little research, right? Daily price variance R&D. As of June 10, the variance of price changes is rising slightly across all populations. Raw variance, stocks with negative net income, stocks with positive net income, and the S&P 500 all ticked up higher on variance of the stock prices. So if you're holding equities of any kind or indices that are highly diversified, all your risk went up. And by the way, the risk is up from the 8th, from Wednesday. So from Wednesday to Friday, the risk went up for the whole year. So it must have been a really bad couple of days. So that's not good for you. We want to share that with you because this is important for you to know. There's more price variance. And there's just some other, there's good data that we showed. We updated our negative beta stock list, our top dividend stock list, leptokurtic, platykurtic stocks, the low and high beta stocks. You're seeing some activity where the high beta stocks are blowing out and stocks are not maintaining the high beta that they had before because the S&P 500 moves so fast, it's hard to maintain that beta. Positive and negative skew stocks that have fallen in price. By the way, stocks with that lose money fall faster. Stocks that make money fall less. So stocks that lose money are falling more, deeper, higher percentage of loss over the past year from their average trading price than stocks of companies that made money. Price and volume spikes, there's a lot of those. Stocks that split this year, not a lot of difference. So take a look. You have a lot of data there that you can look at. So what are we going to look at next? We talked about Revlon. We talked about how companies basically crash out. So VIX. VIX is important because volatility is rising. Variance is rising of stock prices. And you would expect the cost of the insurance to go up. So let's take a look. So the S&P 500 looks to open. If it opened right now, it'd be opening at 3,803 and a quarter. Down 100 points, down 2.5%. That is phenomenally bad. The NASDAQ at 11,500. The Russell at 1750. Now Nikkei's down 2.5%. The Euro stocks are down 2.5%. The DAX, Germany, is down 2.2%. My guess is if we take a look at some of the other European exchanges, we're going to see similar bad juju. What do we got? Where is it? Oh, China didn't do that bad. The SSC and the Shenzhen down like 0.5%. The Hang Seng was down 3.4 though. I'm assuming more Western exposure. Just tougher. Nikkei, this is saying it was down 3%. Belgium, 1.5. Euronext, 2.2. CAC 40, France, down 2.4%. DAX, Germany, down 2.3%. FTSE, London, England, down 1.7%. Okay. So it's a bad day. It's a bad day globally. It's a bad day in the U.S. So what else I did all this already. So let me show you what I saw. Gasoline prices at 408. That's interesting because gas is starting to come down, but I think it's too little too late, right? You need that to come way down for inflation. The 30-year bond, 134 and a quarter. Now, I got little stickies, right, where I've been telling you 135 is the support level, right? So 134 and a quarter is really bad. It means that, in my opinion, the 30-year bond is going to go a little bit in a free fall. The 10-year note at 115.77 also broke a major support level. So you could have a free fall and you could have a really fast increase in the yields. So you see copper's down to 420. That was like 435, 440 while we were talking about it. Silver at 21.58, not a big change yet. The euro at 105.11 is not a big foreign exchange move. Neither is the Japanese yen at 74.75. It's more of a flat line. So the US dollar has stopped strengthening. Okay. Exchanges are going down. Oil has not dropped. No, not in the likely. It's 118.64 for West Texas Intermediate. So it's just so interesting, right? You've got a really rough equities open. That's how I read this. So let's look at the foreign exchange. So this one, euro dollar at 104.53 starts to look interesting. You know, this is the same website with different data. So I'm thinking FinViz can't keep up with look at Bitcoin. Bitcoin at 23.7 is a major break of support right there. So that support, you might not be able to see it. Let me blow it up. This is the chart for Bitcoin for the year against the US dollar. You can see that it mostly went up, went down, and then down, way down there at 30, it had a really, really solid base at 30,000. It just kept coming up, kissing 30, touching 30. It reminds me when I was in high school and I did gym class, how they made you run real fast and then touch the line with your hand, and then run back and then run, touch, right, with your hand. It was always touching 30,000. Well, now it may touch 20,000. It broke like a bad habit. 23.7. So Bitcoin has lost its support. That's bad. That's rough for like, I wrote it in my blog. That's just bad for a lot of reasons. Let's take a look at what else did I pop up here? There was some news that I think is important. that could be affecting the markets. So, folks, if you're out there, go ahead and ask me anything. I like when you ask me questions. It's way better. I appreciate it when you do that. I'll keep the screen up so that I can see if you ask me any questions. So, China has decided that it's willing to fight a war over Taiwan. Private warnings conveyed to the U.S., probably through lobbyists. China is disputing the U.S. view of international law. The Taiwan Strait does not constitute international waters. And that China will basically smash to smithereens any Taiwan independence plot. And it will uphold the unification of the motherland. So what this tells me is Biden is playing with fire here. He did not have to do this. I'm sorry, U.S. President Biden. He did not have to threaten China. And so now China is asserting. So I don't know about you, but I got a daughter, right? She's a little kid. She's a little teenager, right? She's like 10 pounds, if anything. She's got no muscle. She's little, right? I don't want to see her putting on a flak jacket, carrying a weapon, and having to walk through the Taiwan beaches to try to save Taiwan. I don't want her fighting there. So we'll do it if we have to, but I think we just borrowed some trouble with China, and I'm not super happy about that, right? I don't think the market is either. So what's going on with Russia? Russia had some interesting news. Russia will be deploying to Nicaragua for humanitarian operations, and don't be surprised if they put in some intercontinental ballistic missiles in there for humanitarian purposes. So now, just like we're going to have potentially nukes in Germany, in Poland, in Ukraine to have intercontinental ballistic missiles, now we're looking at them having them in Nicaragua. And you know how Russia works. First it's Nicaragua, and then you'll have them in other countries as well. I wouldn't put it past them that they're talking to Mexico right now. So this is very interesting. Russian army will be deploying to Nicaragua. Okay. That means their ships will be sailing by Florida or New Orleans. I wouldn't be surprised if the Russian army put in New Orleans for some R&R. Yeah. Thanks, y'all. India's a winner in Ukraine. That does not surprise us at all. This was just a silly article. This is one of those crash articles. Broad-based inflation-induced selling pressure. Okay. Sell in May and go away. That's fine. I had a few other things in here. Maybe the big thing is, if I go back to the futures, and we look at just how big some of these drops are, a drop of 2.3% is more than a 1 standard deviation move. I want to say that's roughly, that the Russell at 2.5% is probably a 1.5 standard deviation move. The NASDAQ at 3% is roughly a 2 standard deviation move. And the S&P 500 at 2.35 is roughly a 1.5 to 1.75 standard deviation move. You've got major standard deviation, multiple standard deviation moves pre-market today. Now that doesn't mean that it's going to happen. See, that's the thing. It may not happen. What do you mean, Jeff? Why wouldn't it happen? Well, sometimes people bet on the futures. Sometimes you can make a leverage bet on just S&P 500 contracts that could change the market. But in fact, the underlying securities, which we're going to look at right now, they may not be so bad. There may not be any follow-through. So let's take a look and check the follow-through. So what we do, and by the way, there's your answers. Oh, look, I shared them. There's your stock picks. Right. We run the model every day, and we updated our website. And the big, if you look at our blog, which is chicagoquantum.com, and you go to research today's insights, I basically told you what stock picks are and what they mean and what all the differences were. So we're going to take a look at high beta stocks. So you would expect high beta stocks to be down pre-market. Oh, they're down a lot pre-market. Like MicroStrategy down 23%, Mara down 16.5%, Coinbase, SI. This is going to be a really bad day in the market. I just shivered in case you didn't see that. The Trade Desk down 5.5%, pre-market. Grow Generation, a stock that we really love, down 5%. We don't own. Right now, we only own 2 stocks and a little bit S&P 500, and that's it. So high beta stocks are down. Let's take a look at the money managers. What could go wrong, right? Well, Raymond James could go wrong, down 5%. Alliance Bernstein, Robinhood, KKR. Good morning, Hope. All these money managers are down pre-market. Let's take a look. Give me some good news here. Let's look at specialty retail. Wayfair, I guess mail order, expensive mail order stuff's not going to do so well today. Carvana, Joanne Products. Alibaba's down 5%. That's interesting pre-market. Party City is approaching $1 a share. Dillard's is down. BJ's is down. Etsy, Burlington, Amazon is down 4.4%. Okay. You've got big and small pre-market down, but not as much on the retail. So maybe let's look at crypto and let's look at the physical miners. Probably the first sector we're going to buy as the market bottoms is physical miners and steel companies. Because they are, forgive the pun, rock solid. Cleveland Cliffs, 1875 pre-market, down 5%, and that really was touching new lows anyway. Newmont Mining, Rio Tinto, BHP, U.S. Steel, Steel Dynamics, Nucor, which is the best of the steel companies. They're all down pre-market. If you look at crypto, wow. Really, really, really low, okay? So, cannabis, tobacco. Come on. Maybe people got to get high because the market's going down. Nope, down. The only thing up is Corbis. Corbis is up 3% pre-market. You know, we are long Corbis, and we are long-term holders. We have some holdings now that are more than a year old. I like it. It's good to see that the stocks that we picked aren't falling during a stock market crash. Chips and semiconductors, pre-market action, they're all down. Okay, so money where your mouth is, right? So what this says to me is the markets, railways, trucking, logistics. The only thing going up is Greenbrier Companies, which has a market valuation of $1.3 billion. I'll be honest with you, I don't even know what Greenbrier Companies does. So I'll probably look up that for later. So markets are down. I mean, across the board, kind of under the radar. Let's look at what the current efficient portfolio from last week and some other stocks that we threw in. It's down a lot pre-market. So your high beta, low risk stock market portfolios are down. Hopefully, if you're in the CQNS up portfolio that you've hedged, continue to hedge, really important. So how am I going to wrap this up? So I guess we'll go to the most important things, right? Crypto's down. Bitcoin actually has recovered to 24,000. That's bad for the stock market. The euro crashing and the dollar being this strong is also bad for the stock market. It causes stock market badness. Futures down is an effect. Futures are down. The VIX being up to 31.25 is an effect. It's an effect of the stock market moving so fast. And so if we look at the S&P 500, I'll show you how you can find it. So the size of the bars has gotten bigger. If the size of the intraday bars gets bigger, the difference between high and low for the day, that means there's more variability. Now, if you're a stock market trader and you're moving in and out, that's great. If you're a buy and hold investor, the last thing you want to do is is look online and see that your investments are up 3% in a day. They're down 3% in a day. It makes you very nervous. You want steady sailing. You want the stock market just to go up a little bit every day. I know this sounds silly, but that's what real people want. Now, traders, they love the volatility, but kind of real wealth investors, they just want a slow, steady climb. And if the market is going to drop, just drop for short periods of time. Let me buy a little more and go back up again. So I want to thank you for listening. If you liked the video, please hit the subscribe button. It helps us. We are not paid to make these videos. So when you subscribe, you get notifications, and it helps YouTube to know that somebody likes the videos and helps them to spread the word. Also, hit the like button, drop a comment. We're always glad to respond to those. And I just wish you good luck in the markets today. We have sold most of our equity exposure last year. We thought this was a tough time. And so when we see the S&P 500 at 3,800, we sold our holdings at 4,400, 43 to 4,500. And so we got out early. And then, of course, it went back up to 4,600. So I guess you could have gotten out later, but we were a little bit nervous there. And you're going to read a lot in Twitter, if you follow those things, a lot about crashes, right? I think one of the number one trending was FOMC, which is Federal Open Market Committee. The next is stock market crash. So you're going to see just really not so good news, right, in the market. And so, whatever it is, right, you're just going to see all kinds of stuff. Just trade your plan, stay focused. And again, good luck in the markets today. God bless you. Bye-bye.